You know how the stock market feels like it has these massive mood swings, right? One day it's on top of the world, totally euphoric, and the next it's in a complete full-blown panic. It is so easy to get swept up in all that chaos. But what if there was a better way? We're about to dig into a really simple but kind of brilliant metaphor that can help you not just understand all this madness, but maybe even profit from it.
Okay, so let's try a little thought experiment. Imagine you've built a pretty successful business and you have a partner. Things are going great, but your partner has this one serious problem. They are dangerously moody. I mean, their emotional state just swings wildly, almost uncontrollably from one day to the next. So on Monday, he comes into the office, just thrilled, telling you you're both geniuses, and he offers you an absolutely insane price for your half of the business. But then Tuesday rolls around, and he's back, looking like the world is ending. He's telling you the business is doomed, and he's begging you to sell him your shares for just pennies. So what would you do? How would you even deal with that?
I mean, you definitely wouldn't let this emotional, erotic partner dictate your financial future, right? Of course not. Well, that partner is the stock market. And that's the powerful idea we're going to unpack today. The genius behind this whole analogy was none other than Benjamin Graham, who's basically the father of value investing. He came up with this character he called Mr. Market to explain how the market's psychology works. And his whole philosophy is just perfectly captured in this one quote. The intelligent investor is a realist who sells to optimists and buys from pessimists. So who exactly is this Mr. Market? Well, think of him as the living, breathing embodiment of the stock market's daily mood. He shows up every single day, and he makes you an offer. He'll either buy your shares from you, or he'll sell you his at a certain price. But here's the catch, and it's a big one. His prices have nothing to do with the actual value of the companies. They're based completely on how he's feeling that day, his fear, his greed, you name it. And listen, this isn't just some old theory from a textbook. Mr. Market is very, very real, and he is incredibly active right here in the Indian markets. In fact, we've all seen some pretty dramatic examples of his mood swings just in the last couple of years. I mean, just look at this. Think back to March 2020, right when the pandemic was hitting. Mr. Market was in an absolute panic. He was practically giving away shares in solid, fantastic companies at total bargain basement prices. But then, fast forward just a year to 2021, and he's completely flipped. He's wildly euphoric, trying to buy those exact same shares back at massively inflated prices. The companies themselves hadn't really changed that much, but Mr. Market's emotions, they'd swung from one extreme all the way to the other. Okay, so if the market is this emotional, this unpredictable, how do you, as an investor, keep from getting swept up in all the drama? Better yet, how do you turn Mr. Market's instability into your advantage? Well, here's where you have a huge strategic advantage. You can just ignore him. It's that simple. You are never, ever forced to accept his emotional prices. His daily offers are just that. They're offers. They're opportunities, not commands. Once you start recognizing his mood for what it is, just emotion, you can protect yourself from feeling it too. You can use his panic to buy when things are cheap and use his euphoria to sell when things get too expensive. Look, if you remember just one single thing from all of this, let it be this. You do not have to ride the market's emotional roller coaster. You can just step off, focus on the real underlying value of what you own, and let Mr. Market's mood swings work for you, not against you. His emotions do not have to be your emotions. At the end of the day, Mr. Market will be there every single morning, driven by either fear or by greed. The market is always going to be emotional. The only question that really matters is, will you be?